Steve Rhodes, what's going on?
Sports in the Tampa area.
Yeah, right down the street. Yeah, totally.
So this weekend, I happen to be up in Orlando, taking a couple grandkids to the theme parks up there. But I happened to flip on the sports when I was in the hotel room, and I see this LPGA tournament from Bel Air.
I know.
I was like, oh, this is great.
It's pretty amazing. There's this guy, Doyle, folks, that built a golf course right where we are. Well, the golf course is there. He did it over, and, the bottom line, he has the bread to get what it needs to, have something like an event like that. And it's amazing. I know. It's just.
No, it's great. You've got that. Then tonight we've got big football game.
Oh, huge. And then did you see the Toronto Raptors are coming into Tampa? Toronto, listen to this. The Toronto Raptors, folks, okay?
Really?
Are starting their season in Tampa. Yeah, because they can't go over the border, so they says, okay, we're moving to Tampa. They're going to stay. We're going to have basketball now.
I love it.
Totally.
Hey, by the way, happy Thanksgiving.
Yeah, you also, man. Totally.
Yeah, thank you. I thought we'd just spend a few minutes today here, just a couple of things that I've noticed in the markets to share with you and our listeners out there. Now, of course, we all know about the seasonal cycle.
Yes.
We look at this chart periodically, and on average, the Dow forms a bottom during the year around the middle of October. October 13th has been the most average date. This year, we actually have a low inside the Dow on October 30th. So the seasonal cycle aspect, until that low gets taken out, is in place. And so there's the possibility the markets will run up, just simply the favorable seasonal cycle, which, Tom, typically takes the markets into that first week of January, January 6th to be specific. But we're not going to focus on the dates. We really look at the patterns that are occurring around those time frames. But so this is the cycle pattern that we're in. So how do we know whether or not the markets are in fact going to do that? Well, there's other pieces of the puzzle, Tom, and some of those pieces are consolidations, which is apropos to what we're taking a look at today. And here is a 30-minute set of charts for our 4 equity future contracts. The ES Mini representing the S&P 500 in the upper left, the NQ, the NASDAQ 100 in the upper right. The lower left is the Dow, the lower right is the Russell 2000. Now, the cool thing here is, now this is just a 30-minute time frame, but it's very clear and very easy to see the consolidating patterns in the ES, which is about a 40-point consolidation, and you can see that rectangle. It's very clear. And the same thing inside of the Dow, which is a 332-point consolidation. Now, inside the NQ and the Russell 2000, they don't have those same consolidating patterns, not as clear, although the NQ, we could probably make that case. But let's not focus on that just at the moment. We can see the 2 clear 30-minute ES Mini consolidations. Now, I had taken this image here, Tom, probably about a quarter to 3 as I was preparing for the show, just to give you the most recent updated chart. Of course, I go out, I grab some water, I come back and sit down and say, well, that's interesting. That chart's not worth anything anymore because of this, because of, as you mentioned, the reaction to the market's reaction to potentially Janet Yellen being named the Fed chair out here. So this snapshot, and we'll go take a look at the current chart here in just a moment. So this was taken maybe about 5 minutes ago. And what we can see here is that the Dow is actually broken out. So when you take a look at this consolidating pattern here, this is giving us a measured move price projection. Cool. Folks, that's the cool thing about consolidations, is they give us a price projection, either to the upside or to the downside. We never know which way it's going to break, but once it does break, it gives us that price projection, which inside the YM will be 29,807. So as long as price stays above that consolidation, that's what we should expect or anticipate overnight. The ES Mini initially hadn't broken through the top of its consolidation pattern, but if it does, it gives us a measured move of about 36.23 out there. So let's do this here. Let me just escape out of this if I can. There we go. Now here's the live chart. And so this is kind of interesting. Talk about these markets are so they really keep us on our toes. If you take a look at the ES Mini, all it did during that Janet Yellen announcement was get up to the top of the consolidation and give it up.
Exactly. No, as we're speaking, that's what's happening. I know, man.
and here's the dynamic, folks. If you can't, and I love this, I'll owe Tom $1 after this. But if you can't bust them up, what is the market going to do?
Bust them down.
Bust them down. So the ES Mini is right now giving us a signal that it may try to actually bust it down overnight.
Yeah.
here's, folks, what you'll need to see, because price is trading above the top of its 30-minute profile, which is 35.76. That's a resistance point. If price gets back below that as we come into the close here, below 35.76, well, then the ES Mini failed to break out. Now, the Dow doesn't mean that the Dow can't move higher out there, but you're not getting that confirming message inside of the ES Mini. So we can move from the 30-minute time frame charts. In fact, we're going to. And now we'll go to larger consolidation patterns. And the larger consolidation pattern is taking place in the daily time frame. And here we're taking a look at the S&P cash in the upper left, the NASDAQ 100 in the upper right, and the Dow in the lower left. I've got the Russell 2000 lower right, but here I'm just focused on the consolidations. On the daily time frame, the S&P 500 is trying to break out, but it has not been able to. So far, it's been a failed break to the upside. If it does break out of the consolidation, folks, 39.78. And all this fits with the potential for that seasonal cycle, Tom, to take us higher into the January timeframe. But the S&P 500 has not proven itself to you or I. The Dow has. The NASDAQ just still consolidating sideways. And really, you want to get all the markets moving higher if there's really going to be a true bull market run here. And we just don't have that message. So, folks, you can draw these consolidation patterns, whether it's in the cash indices. You can do it inside the equity futures contracts. Here are the daily time frame for the equity future contracts. You can see the same type of consolidation patterns that are going on. And consolidations can drive people crazy. Now, the one last thing, Tom, that I can leave folks with is I have these different market scanners, and they look for different top and bottoming signals for multiple time frames. And the Russell 2000 has really been running to the upside today. And if we take a look at, so we have topping signals actually for the Russell 2000 and its 30-minute and its 120-minute time frame.
Okay.
Now, how do we put this together? I'm going to pull over the Russell 2000 equity future contract, and it's called the TD9 count. Tom DeMark out there.
Yeah.
You can see bar number 9. This formed here at 3 o'clock. Typically, when price gets to bar 8, 9, or the bar following 9, we're in bar following 9 right now, that can identify a top. So what folks should be paying attention to, I would say overnight, is if the Russell 2000 trades closes above 1828.80, I'd say in a 30-minute time frame, that's telling us about a significant momentum move to the upside. Likewise, if you see a move below 18.50, the Russell 2000 on a short-term time frame should pull back to about the 1804 level, maybe down to 1794. So it's all about the consolidations right now in the market.
You gotta love it. Nice job, Steve. Come on over to our website, folks. You can get Steve's newsletter right now, Mastering Probability. You just hit newsletters, you hit Mastering Probability. Have a great Thanksgiving, Steve. We look forward to the show tomorrow.
Thanks, Tom.
Thank you.